Based on these factors, I'm anticipating a rebound, with a high probability that the price will rise to around $59K. Hello, this is Killer Whale. Today, I took this video to share my Bitcoin outlook. Before diving into the main analysis, let's quickly review my previous analysis. When I uploaded my last video, we were at this point on the chart. At that time, I anticipated a rebound, and as predicted, the price bounced after the video was uploaded and hit my target. That wraps up the review, so let's move on to today's analysis. Now, let's get into the core of today's video. I continue to expect a strong upward movement from the current zone. Let me break down the reasoning behind this outlook step by step. The first reason for the potential rise comes from the 4-hour Bitcoin chart. I've applied two indicators here, the 200 EMA and the RSI. Currently, the price is below the 200 EMA, while the RSI has hit the bottom and is beginning to rise. In many cases, when the price is below the 200 EMA and the RSI is at its lowest, the price tends to rebound and move back toward the 200 EMA. Let's verify this by using the past data. Here's a recent example. The price dipped below the 200 EMA and the RSI also bottomed out. Shortly after, the price rebounded and touched the 200 EMA. Let's look at another case. This is the chart from April 2024. In this instance, we can see two aspects. The price dropped below the 200 EMA and the RSI bottomed. Shortly after, the price rebounded to touch the 200 EMA. Then the price fell below the 200 EMA again, with the RSI hitting bottom, leading to another rebound back toward the 200 EMA. Let's review one more case. Here's the chart from January 2024. Once again, the price dropped below the 200 EMA and the RSI hit the bottom. Afterward, the price rebounded, touched the 200 EMA, and then continued a strong upward movement. Now, let's return to the current chart. Based on these historical examples, it's likely that the current price will also rebound and rise to touch the 200 EMA. The second reason involves an upward channel. This channel is formed by connecting three key points. If we closely observe the middle line of this channel, we see significant support and resistance, which adds to the channel's reliability. In most cases, after the fourth touch, the price tends to rebound and rise toward the middle line. Let's verify this with past data. Here's the chart from June 2022. After a sharp drop, a dead cat bounce occurred, forming a double top. You'll notice that this looks similar to the current pattern. Following that, the price reached the middle line and continued to the top of the channel. Here's another chart from September 2020. After a sharp drop, a dead cat bounce again occurred, forming a double top. The price then found support at the bottom and rose to the middle line. Now, let's return to the current chart. Looking at the current chart, we can anticipate that the price will find support at the bottom and rise to the middle line of the channel. Let's move on to the next reason. The third reason is the trap pattern within a parallel channel. When this pattern occurs, it often results in the price moving to the opposite side of the channel. Let's verify this with past examples. Here's the chart from January 2024. In this instance, we saw three traps. After the first trap, the price dropped to the opposite side of the channel. After the second trap, the price again fell to the opposite side. After the third trap, the price rose to the opposite side. In all three cases, the pattern was accurate. Here's the chart from September 2023. In this case, two traps were formed. After the first trap, the price dropped to the opposite side of the channel. After the second trap, the price rose to the opposite side. Both patterns played out accurately again. Let's return to the current chart. Looking at the current chart, a trap appears likely to form at the bottom. If the price re-enters the channel, there's a high probability that it will rise to the opposite side of the channel. Let's summarize the key points from today's analysis. The first reason is based on the 200 EMA and RSI. When the price is below the 200 EMA and the RSI is at its lowest, there's a high chance that the price will rise to meet the 200 EMA. The second reason involves the upward channel. The price is currently touching the channel for the fourth time and in most cases this results in a rebound to the middle line. The third reason is the trap pattern. A trap is likely to occur at the bottom, and if the price re-enters the channel, there's a strong chance it will rise to the opposite side. Based on these factors, I'm anticipating a rebound, with a high probability that the price will rise to around $59K, where all these technical factors converge. That's a wrap-up for today's video. If you enjoyed the content, please don't forget to like and subscribe. Thank you for watching.